Welcome to Big Boy Crypto, home of the BitSquad, largest and greatest crypto community in all of the interwebs. That channel is working harder to keep you in the know when it comes to cryptos around the blockchain. We come to you Monday through Friday at 5:01 p.m. Eastern Standard Time, where we talk about your favorite topic, even when it's boring. And today, we're doing it with the best panel we've ever had in the history of the show. We're going to go ahead and start on the top right. He's throwing up, not gang signs, he's throwing up the finger and the thumbs up because you know what? He believes in blockchain. Talking about Mac and Cheesy. Then on the bottom right, I think we got everything working audio-wise, visual-wise. He's looking great. He's sounding sharp. We're talking about Arcane Bear, and he too is ready for the bull market. Don't let his name confuse you. Then on the bottom left, we have my favorite buddy out of the desert. Talk about Sin City Crypto. Make sure you check out his channel. Him and his partner always have a good time talking blockchain. Then on the top left, it bears repeating. You got to check out Rice's channel. He just put out a really good interview with John McAfee's wife. Check it out. Really good content coming out regularly on RiceTVx. But we're going to be talking about liquid Bitcoin, not Bitcoin mined in the ocean. No. Also talking Cosmos Hub. When's the last time you heard someone talk about Cosmos? And ADA, yeah, that's right, Cardano with the multi-address feature. Is that going to, change things up? Are people going to finally stop calling it a ghost chain? But before we get into that, let's look at the Bitcoin market and see where things are heading. Now, I've had some bad luck refreshing. I'm going to refresh again. We see Bitcoin at 287 to 20,287. And look at that. I refreshed, brought the price up $4. You can thank me later. Bitcoin down roughly 3%. Ethereum down roughly 3.5%. Still kind of holding some good support. Tether, getting through some bad news. Apparently some hedge funds coming after them. But we're seeing Bitcoin hold strong above 20, but barely. Arcane Bear, we wicked down as kind of a little bit low compared to, where people were predicting a year ago, hitting that 17, that 18 mark. Now it seems like we're barely holding above that 20. What does it feel like Bitcoin's going to be doing later this week? I mean, is that 20? Are we about to crash through that, or are we expecting maybe a little bounce?
It seems to be that we're hitting somewhat of a localized bottom. Now, a lot of this has to do with a much larger macro story around monetary printing, inflation, and the interest rates. There's a great article, or a few articles that Michael J. Burry put out on his Twitter the last few days talking about what he calls the bullwhip, which is this kind of very strong deflationary process that might be swinging in, as retailers are saying that it's actually cheaper for them to just give people the products that they are trying to return instead of actually returning them due to the cost of storage. So there seems to be this huge glut of excess in a lot of the front end retailers. And the idea here is if the FOMC gets a kind of a lower inflationary status because of all of these extra products that are sitting on retailer shelves, will they start to print? And we just saw that they're giving $1,000 away to Californians as a gas tax. So we already see they're starting to open up coffers from somewhere to give money to people again. And I think this is largely the conversation that's hard to notice, is that Bitcoin as a real value asset is most valuable when the banks and the governments are the least safe with your money, right? So back in 2013, when the banks in Cyprus said, if you have over $100,000, we're going to take all of your money, that's when Bitcoin would have been the most valuable for someone to own. So I think Bitcoin as a utility still is the most valuable when people that need it the most, which is usually when your money is the least safe in banks.
Yeah, and we're seeing it. And if you heard a little bit of noise, we just had a crazy lightning crash. I don't know if you guys could hear that, but certainly could hear it through the headphones. But let's talk, speaking of Bitcoin, we have another layer 2 solution. This one's called Liquid and the Liquid Federation. It's a group of crypto businesses, exchanges, trading desks, infrastructure companies, game developers, more. And they want to create a competitor to the Lightning Network. A little bit slower, I believe. Their transactions settle once per minute, which is a little bit faster than Bitcoin's once per 10 minute, a little bit slower than Lightning Networks. And they have a couple extra features. They want some privacy features. They're calling it confidential transactions, where it can hide, and you have to be a current Liquid user to see what is happening on the chain. And there's other things going on. They have the Liquid asset is going to be on Blockstream's Liquid network. I want to bring it to you, Rice. We've talked about layer 2 solutions before. We've talked about Lightning Network. I I think you were at Bitcoin Miami and you saw Jack Mahler's presentation about Lightning and what it can do and how it's going to scale out. Do you see a future where there's multiple L2s, or due to just how retail works, every store that it's Visa or MasterCard? Do you see a similar situation happening with layer 2 solutions on Bitcoin? Because say there is a future, you use Bitcoin to buy your pack of gum, you're going to have to use a layer 2 solution. Is that merchant going to allow 20 different options, or do you think it's going to be more like 2 options, 3 options?
Good question. And thanks again for having me back on Around the Blockchain. I do appreciate. And for people wondering about the X, my channel is RiceTVx. I'm not an XRP supporter, so don't think that, please. Nothing against XRP gang at all.
Just to be clear.
XRP army.
Just to be clear.
Just to be a little bit clear. Now, I have a really interesting take when it comes to this. Now, I do see there being competition for the Lightning Network. I do see, not 20 different processors being available for payment methods, but there being several different options to choose from. Now, the reason that I see this happening is because, and this is the biggest problem, and I've been very, very vocal about this. I even talked to Adam back at Bitcoin 22 about this, trying to do an interview with him. I feel as if entities like Blockstream in particular are keeping Bitcoin throttled and limited on purpose. Instead of improving Bitcoin, they would rather create different solutions that they can profit off of. To give you an example, the Bitcoin developers, the Bitcoin core team, they don't get paid to develop on Bitcoin. There is no CEO or corporation, no foundation that's paying these individuals. So there is no incentivization as far as being building on Bitcoin aside from improving the network. But when you have entities like Blockstream that are willing to hire those same developers to create different solutions for them, whether it's sidechain or a layer 2 solution, all it's doing is allowing for them to profit. And this is centralized as hell. Regardless of the confidential transactions, if the government wants to come in and get the information, Blockstream is willingly going to give that information away. They're going to be very compliant, and they're playing the game of compliance and regulation. So I'm not a fan of doing this. My take on this is we need to improve blockchain, the Bitcoin blockchain. And if you look at what happened in 2017 with the Bitcoin Cash hard fork and the split that took place, you can really dive into that. I did a series of interviews with Roger Ver about this. I encourage people to check out. There's a lot of history when it comes to Bitcoin being kept limited on purpose. And I'd love to hear other people's opinions on this.
All right, Mac, I kind of want to stay on this. This is an interesting theory. I'll be honest, I haven't really thought about it. Do you think there are misaligned incentives with these people operating these L2 blockchains and kind of using the intelligentsia or just maybe directing social media talk into, let's avoid that soft fork. Let's avoid that hard fork. Let's avoid these upgrades. What do you feel about that theory, or that, I don't want to say conspiracy, because I mean, it's just, just a theory, but it's slightly conspiratorial. What are your thoughts?
A couple things. I also wanted to clarify, when I was eating mac and cheese in the beginning, in the intro, I am a mac and cheese supporter. However, the channel is the incubator. Now, getting to the conspiracy theories of don't use that, don't soft fork, don't do that. I think there's truth to that, right? And like Rice was saying, if the money isn't there for developers to build directly on top of Bitcoin, maybe they're not directly incentivized. I think there are a lot of developers who are, whether or not they're getting paid, they probably have a lot of eggs in that basket, so they are incentivized kind of indirectly based on their bags. But yeah, I think follow the money, follow the incentives, and right now there is a lot of truth to be said that there's money to be made on a layer 2 on top of Bitcoin. But yeah, I also echo kind of from a security standpoint and like being private, I wouldn't necessarily say that this is the solution. If you just need to be a user to get the information, just giving a username and password effectively just to get on this layer 2 and you get access to everybody's transaction history, that's not necessarily, and I'm saying username and password kind of tongue in cheek, but whatever the process is, people will do that to get the transaction information if they truly interested in getting that information, unless it's truly secure and there's a private nature to the fundamental technology. But yeah, I think end of the day, just follow the money and you can really follow decision making.
Yeah, it's funny how they tout their security features. I'm sure there's Monero fans just screeching right now. All right, final question on this topic. Sin, we're talking about, basically a DeFi dApp built on blockchain or built on Bitcoin. Why do you feel that there's so few DeFi apps and dApps being built on Bitcoin? I had a stat here. 2022 so far, there's 212 DeFi projects, and only about 20 of those are using Bitcoin. The vast majority, of course, using Ethereum. Why do you feel that there is such a disconnect with Bitcoin and, these solutions, these layer twos and these dApps being built on that when it is by far the highest market cap of all the cryptos?
I mean, that's not what Bitcoin's really, the purpose of Bitcoin right now is not to facilitate DeFi. There are apps and dApps and other chains that do that better, faster, and more efficiently. You only produce one block every 10 minutes on Bitcoin. Now, to go back to what the panel here was saying is that, you have centralized entities basically working on blockchain. So you have this like marriage of centralization and blockchain all in one. And so, the Lightning Network, yes, it's fast, but at the end of the day, let's not fool ourselves. We have a company just doing a bunch of transactions with other people, just sending Bitcoin here, there, here, and there, just back and forth. And then they just throw their own ledger on the blockchain every 10 minutes or every 20 minutes. And so it's not really blockchain as we know it. It's just a way that a centralized entity can transact Bitcoin between their own users and then give you this false sense of security by checking in with Bitcoin. Now, at the end of the day, if their own order books are in line, then cool, yeah, it's secure, but it's all about the entity that's running it anyways. Now, if you want to have a layer 2, you want to build on top of Bitcoin, that's your own prerogative. Now, the free market's going to decide whether or not it's going to be the go-to DeFi project or run smart contracts. Honestly, it's not designed to do that. It's not designed to scale, and it's probably never going to get there. You say, why don't we improve the Bitcoin network instead of pushing on the layer 2s? Well, here's the thing. There's no incentive to improve the Bitcoin network. Why? Because the miners are the ones that vote on proposal changes. And so there's no incentive for the miners to vote on proposal changes because right now, the way it's set up is that they're just basically fighting for hash power. And if you got a bunch of money and you can leverage your own Bitcoin that you mine, you can get more ASICs. So this is a circle loop. They're never going to change anything. There's no reason or no incentive to change anything. And this layer 2 thing that they're building, it's cute, it's cool, people will use it, but I think the market in itself will play out, and there'll be chains that do it efficiently that'll rise to the top.
All right. Well,
let's talk real quick. I just want to add in this because it's important to what Ben Armstrong talks about on the channel that one of the entities that backs up Blockstream is Digital Currency Group, and then you also can look at all the investors inside of Blockstream and in the Lightning Network, and you can see that it's legacy finance trying to keep itself relevant as well. Your banks, your credit card institutions and such, they're all invested.
Yeah, and if you want to learn more of that, we have an older video on Digital Currency Group, really good video. I urge you to check it out. Well, let's talk a little Cosmos, and I pulled up the price chart. I was just curious to see nice little Carl Sagan joke there. Cosmos currently trading about $7.52. I hope you're prepared. Are you sitting down at home? Are you sitting down? Because we're about to scroll the chart here. This is the all-time, and that is beaten down considerably, folks. We had it here, the 2020 run-up. It had that nice January, February, and, saw some really, really great price action, hitting that $40 level, $45 level, and then just on the way down, currently reaching those earlier support levels, interestingly enough. But Cosmos, they have a couple upgrades. They want to introduce interchain security. Think of Polkadot when you think of interchain. They say they have more than 200 blockchains that let people build new application-specific chains if they manage their own validators. And that's their secret sauce here. They're going to allow people to use their security interchain validators. So people don't have to worry about, what is verified, what access to information is out there. Everything is going to be secure using this tried and tested cryptocurrency that's been around for many, many years. Now, we were talking before the stream, Arcane Bear, these layer 0, they like to call it, these interchain operability, blockchains. Oh, it's going to solve the future, Polkadot. You're going to use Polkadot so you can interact with Ethereum and Bitcoin and Cardano and Solana all in the same place. Well, we haven't seen that. That hasn't come to fruition. Is this just a dream, or are we just years away from the tech getting to where it needs to be?
Well, I think it's a fantastic reminder of how early we are in the ecosystem. I saw Harmony, or the one blockchain the other day, lost $100 million through, again, through a bridging system, very similar to what happened to Axie or Sky Mavis. So the fact that we see such powerful technology and we're still early on where there's kind of simple smart contract deficiencies that end up in the loss of hundreds of millions of dollars this is a stark sign that we're not close to the end of this. We're still near the very beginning. Who ends up being the winner? You brought up this idea of Layer Zero. Now there's actually a company called Layer Zero. They had some really cool technology, and the last few years has really put a fire under more traditional developers' seats to get involved in this sector. So I'm not a huge proponent of Cosmos. I don't know a whole lot about what they're building, but in terms of security, what makes, I guess, Bitcoin and blockchain, crypto, depending on how you look at it, so interesting is that it puts kind of the ownership of security back in your hands for whatever asset conversation you're looking at. So whoever solves these problems of the interoperability between chains is going to do really, really well. You know, even with Chainlink, just the ability to provide randomness data to different chains, we saw an enormous market for. So I think fixing and solving the bridge problem will be huge. Who does it first? I have no idea. I'm not technically inclined to make those decisions. We usually just bet broad spectrum by making a few different investments, being like, well, good luck. we don't know who's going to win this conversation.
The throw it against the wall technique. And you know what? At the right time of crypto, that's the best technique. You know, that's your best chance to get that 200x and, you know, even out so you don't get all your eggs in one basket. Speaking of eggs, let's go to the incubator. Now, Mac, I'd asked you earlier about, can there be multiple L2s for Bitcoin? Oh, I kind of want to ask you the same thing here. Can there be multiple, Polkadot and Cosmos? Can they operate at the same time? Because they are the two biggest Layer Zero protocols. Again, I don't know if you guys can hear that lightning and thunder. If it crashed, that was it right there, actually. So will there be a winner between Cosmos and Polkadot, or in this space, can both survive?
I think there's an opportunity for both of them to survive. I think as this space matures, I think a lot of these products, at the end of the day, they're going to be better at one thing versus another thing. I think they're going to have to make trade-offs in order to actually deliver very highly on one versus another, right? If you're very fast and cheap, you're probably not as decentralized. And these are all kind of just like trade-offs that you make. And now as a builder, I think you're going to come to have to make a decision in terms of how do you want to build and how do you want to actually, like, what service do you actually want to leverage? So you can kind of see this in the world today from a programming perspective, right? Depending on the language you want to use, you choose to build in that specific language. There's a ton of ways to skin a cat, but if you want to build a backend service quickly, maybe you build it in Python. If you want to build it a little bit slower, maybe you build it in Java. If speed is truly important, maybe you build it in C++. These are all different things can make decisions that you need to make from a building perspective. And I think we're going to see the same thing on these Layer Zeros as the space matures more and more, where these can thrive and they can work in tandem, but you don't necessarily have a winner takes all. There might be a winner takes most, but I don't necessarily think that there can only be one solution.
Okay. Now, Sin City, I'm going to kind of ask you to, predict the future here, and we're going to talk about metaverses. With the metaverse, a lot of people are talking about interoperable metaverses will be key. I see you have your virtual Oculus on as we speak.
That's right.
Will that be the case of
it's
metaverses?
VR context? VR context.
Yeah, I knew it. It was like that Black Mirror episode. Will people have open metaverses that do utilize a Layer Zero chain, like a Polkadot, like a Cosmos? Or, in your opinion, do you think that they'll be closed off and it's going to be there's a ETH metaverse, there's a Solana metaverse, there's a Cardano, but maybe not too much interaction between them?
Yeah, I could see that, and you see this centralization of technology in one area. throughout the history of technology in general. I mean, you can look at how Apple and the iOS system aggregates all of the dApps around the world, and everybody builds a dApp for Apple. And the same thing can be said with Samsung and other, with the Android system. And it's not going to change here. You have interoperability between social networks, social media networks. So when it comes to the metaverse, think of the metaverse like a big open mall where each store would be a new metaverse, but they have to have some kind of connectivity or interaction. And perhaps you could transact NFTs and move them from one to the other. Now, as far as the bridge, I do want to say that, this is really amazing technology that Cosmos has. It's not revolutionary because, I mean, at the end of the day, think about it. You can pretty much create a bridge with anybody. All you have to do is take one chain and the other chain and then create a liquidity pool and then just do automated swaps. But where this comes unique is by the size and scalability of these projects. So like Cosmos, for example, is a behemoth with a ton of total value locked and worth. And so to compromise the Cosmos network, it's extremely difficult. And so if you look at layer ones, like you could go back to the Harmony example, the most recent one, is that they decided to circumvent an outside security network to help facilitate a bridge. And so they left that their own tokens vulnerable. And so going with a Cosmos, for example, you pretty much, it's like enabling a security feature on your trading account. Like it might be, you might feel like it's unnecessary, but that extra layer where they have to email you, you have to put in the Google account, like whatever extra measure of security you can add right now, because your funds aren't insured by anybody. And so for me, when I'm doing my research on a project to invest in for my own personal sake, I'm going to look at what are the security features? Who are they partnered with? Because at the end of the day, a chain can be like, oh, we got a new bridge with another chain, but essentially all it is a liquidity pool and some automated market makers in between. So
yeah, well, let's talk about security a little bit, Rice. People are using Cosmos. Sin City brought up a good point. They have 175 security validator set, so it's a robust blockchain. There's a lot of money invested in it. It's going to be certainly hard to do some sort of 51% attack or anything like that. Should companies and protocols and blockchains, should they trust these layer 0 protocols for their security? Or, will there be a hack in the near future, do you predict? I mean, how do you see this playing out? A lot of people trust Polkadot ecosystem. A lot of people trust Cosmos ecosystem. But I heard that about bridges before. How do you see this playing out in the long run?
Well, I mean, ultimately, I feel as if there's going to be a lot more hacks. There's going to be a lot of vulnerabilities that are going to get fixed. I mean, we're still kind of in the early stages of cryptocurrency in general. Now, what Cosmos is doing with the interchain security is very much like what Polkadot has done in the past, but there's other projects that have done that as well, allowing for basically to piggyback off the main blockchain. Komodo was a great example of that. They actually had a way that they would take your hash information and store it at the time in the Bitcoin blockchain. Now they utilize the Litecoin blockchain. So it's almost impossible to 51% attack the Komodo blockchain. Now, I see a lot more of this being available, but it's not interoperability between blockchains. It's just interoperability within the ecosystem. But I definitely see the future as being more interoperable and more cross-chain. There was a metaverse game that I found out about at Decentral. I'm not going to promote the game, but what they did, that I thought was really interesting, was they're creating different worlds, different expansions on different blockchains, but you can take your character and use them on the different blockchains. You can't necessarily take all of your in-game NFTs or weapons or anything like that at this point. But I see that as is coming. But using the idea of different blockchains for different expansions within your metaverse games or something to that effect, I think is a great idea. And then adding that interoperability where we can take our in-game items, whether they be NFTs or some sort of tokens, and being able to transfer them through different blockchains. But security is really important. But the other thing that people are going to have to take in consideration with the security is that blockchain trilemma, which is decentralization, security, and scalability. And usually what happens is one of those three is sacrificed. And generally that is the decentralization. So with these entities, I feel as if there is a lot of centralization involved with their blockchains.
Yeah, I know if I was on Fortnite and I had the best internet connection, I'm jumping on the Solana bus. You know, I'm gonna try to leverage any of those downtimes. Haha, I got that headshot. All right, let's talk a little Cardano. I have this tweet kind of summing up what has just happened with this recent wallet upgrade that they had. And I'm not trying to promote the wallet, but this wallet will allow Cardano to be sent to multiple addresses at once. It's a Typhoon. It's pretty big upgrade. You could do it with Cardano NFTs. You could send Cardano, the native tokens, to multiple addresses at once. Now, whether or not this has any usability, that remains to be seen. Arcane Bear seems cool, but do you feel like this may be leaning more into gimmick, or is this leaning more into, actually usable? Where do you see this having any kind of real retail usage in the future? Will McDonald's use this?
Well, for the okay, let's say for myself, for instance, if I want to send a transaction, how often do I send more than one transaction at a time? It's actually very infrequent. There could be an argument for, hey, I've got a bunch of transactions like payroll or something. I need to send this out to all of my employees, and I can just send it out as a single transaction. This could make a lot of sense. You've seen stuff like this in distribution mechanisms for, how venture capital gets paid out, like apps like Disperse. There's a few others that are out there that will send more transactions in one feature. So, for the average consumer, myself included, if you're only dealing with a few people that you're averagely paying, it's not a whole lot. But for payroll, this type of stuff in accounting, it could be extremely valuable. But on a day-to-day use case, I don't see someone using it too often.
Okay, it's actually a pretty good usage there. And Disperse, I think we have a picture of the app here, Disperse. I think that's Disperse. That's what you're talking about, right? Anyway, there's Disperse there.
Yeah.
So you brought up a good point. Payroll. I mean, I could actually see it being used for that. Now, Mac, I kind of want to talk about Cardano. It's an older blockchain. Yeah, we're reading about upgrades. We're reading about new features. Reading about new DApps. Why aren't the other blockchains, also similarly building out? Is this the Cardano community is just so strong? Because me and you have talked about the difficulty, the coding on Cardano, yet they haven't given up. What are your thoughts on the difficulty factor? And is that kind of for the right personality, a feature, not a bug? I mean, what are your thoughts on they just keep building? These Plutus maniacs just won't stop.
Well, shout out DZ for finding a way to bring in magic cards into around the blockchain.
Yeah.
That is a
that was
feat in
Arcane
its own
Bear.
right.
That was Arcane Bear.
Points.
started
That's points for DZ.
Yeah, point for DZ for bringing that in. And yeah, so we were DZ. We had met up at NFT NYC, and we were at a NFT party for Cardano specifically. And yeah, we were chatting about this, and I think I think all these kind of different blockchains and different networks, they're going to continue to build, and Cardano definitely, they're building, they are doing things, and whether or not this feature is, or this wallet is a really interesting or like has a lot of value, I wonder how many people will actually leverage this. But Arcane Bear's point about payroll, I mean, that's kind of almost an immediate use case. In Venmo, when you go out to brunch, like this past weekend, I was able to pay everybody in all one payment, and that was easy. It was a good user interface. So I think it is nice to see that they're building on top of this, and it's a feature that if leveraged, it can have a lot of value.
All right. Well, Sin City, that's two good examples. I didn't even think about. Yeah, you got the lunch, the Venmo transaction. You got the payroll transaction. Sin City, you run your own company. I'm sure you got a little payroll yourself. Is that enough though? I mean, will this, it's just, I'm just trying to think of actual use cases. I don't know if I would ever need to
I got
send
your
more
use
than one
cases.
at a time. Okay, let's bring it. What
I
do
got
we
you
got
some
here?
use cases, okay? Hold on, man. This is way bigger, man. Y'all gotta zoom out, man. Stop thinking about the retail side. Start thinking about DEXs, liquidity pools, how many transactions, automated market makers who are pushing thousands of transactions per second. Think about NFT minting. All you're doing is you're basically moving assets to multiple addresses at one time. Just think of NFTs, just the one aspect. I mean, how many NFTs are getting dropped to 10,000, 20,000 wallet addresses instantaneously? And then on top of that, I mean, you're going to have institutions that are going to be using and arbitraging different schematics when it comes to tokens. And if you're going to go back to like Cosmos where everybody's interconnected, I mean, you're going to have the movement of assets to so many different wallet addresses. Right now, we are super small, $50 billion in our transaction volume in the last 24 hours in the entire crypto space, and it's going to grow exponentially 100-fold moving forward. So you're going to need projects that can scale and then that are adaptable to institutions. I will say though, with your Magic card, the Disperse, it is easily beaten by the Typhoon wallet. Also, Shark
God,
Typhoon.
that was great.
So
great reference.
yeah, so
that's a tough card to beat. That's a really good card.
yeah, so you know, well, speaking of Typhoon, so the Typhoon wallet that was in that they're referencing here for this this article, this isn't the first time that these assets have been moved around. If you follow Cardano, you know that this is actually something that was accomplished like a month ago. They moved 40 assets in one transaction to 40 different addresses. So if you think about just the possibilities moving forward, where what institutions can do, and not think about, oh, I'm not going to send 5 addresses. You know, I'm not going to send 5 coins to 5 different addresses. But in institution and market makers, liquidity pool, DEXs, you're going to get a lot of that.
All right. And yeah, they say if you resolve a Shark Typhoon, you win the game. All right, RiceTVx, you know, I kind of want to pick your brain on Cardano. Me and you haven't really talked about Cardano. When Cardano launched, it had, you know, about the best disbursement of its tokens that you see. There's a couple that are a little bit better, but it's up there with Ethereum, certainly better than, say, a Solana, where a lot was funneled into VC money. With Cardano, a lot was funneled to the people. Of a very high percentage went to just regular Joes like you and me. What are your thoughts on Cardano as they get bigger, as IOG gains in power? Some might argue that Charles's power is also gaining. Do you feel Cardano is getting a little too centralized, or with its community and just how it kind of loves its decentralized status, is that something you're not worried about?
I'm not really worried about it, and I'm actually a big fan of Cardano, mainly because of Charles Hoskinson. And you know, I've had a lot of opportunities to spend time with him, interviewed him. Really cool guy, very down to earth, very much a people's person. So I can see why it's more of a coin for the everyday person versus enterprises and things like that with Ethereum. Now, I definitely look at Cardano and Polkadot as being my 2 favorite in competition with a smart contract protocol, a decentralized internet like Ethereum, because we have lots of different competition going on in that element. Polkadot and Cardano, to me, are 2 of the best. Another feature too that and I like what Arcane Bear and Sin City had mentioned about the different options and the things that we can utilize, multiple payments going, like sending multiple addresses to via one transaction. One of the things that's going to help that will help with is hopefully we will start seeing other blockchains and other wallets and on different blockchains utilizing these features. Imagine the fees that you could save on Ethereum being able to do something like this. So you see a lot of innovation in other aspects when things like this get created. And then the other thing is we want to see decentralized social media, blockchain-based social media. We want to see blockchain-based video hosting and audio streaming and things to that effect. This would allow for microtransactions where you could batch them all together. Even if the transaction fees are already inexpensive on Cardano as they are, the microtransactions, being able to stack those together will add a lot of benefits to applications, to these decentralized applications, these dApps that are building on Cardano. So that's something that people need to consider as well. So there's a lot of use case and benefits to it, but hopefully we will see this start to mimic on other blockchains and in other wallets.
Yeah, good point. I'm just thinking with Twitch, shout out to the basement chat. You could send us something as small as 1 bit as a tip, and that's just a penny. And so, yeah, if you start looking at some gas fees, you don't want to spend 0.4 Cardano to send 1 penny. But that is all we have time for. And make sure you hit that like button if you've ever been stuck in the basement. And it appears that Sin City Crypto won it. You know what it was? It was all those good ideas, the DeFi and everything else with the multi-address. Sin City, go ahead, leave us with some parting thoughts. Treat us like we're a dying man in the desert needing some water. Give us what we need, sir.
Water's hard to come by here, so only my friends get water. But speaking of friends, I want to say shout out to the Sin City crypto community. I see you guys are loud and representing here in the chat. We did create a DAO about an hour ago, and the DAO, the Sin City crypto DAO, has requested that Ben come visit our studio when in Vegas here next month. We heard you might be visiting here in Vegas, so we got a spot here for you in studio. Come by. Wasn't me. It was a community. They asked me to do it. So.
Hit that like button if you'd like to see that happen as well. That is all we got time for. Make sure you check out everyone's channel, Mac and Cheesy, Arcane Bear, Sin City Crypto, RiceTVx. Also, Frankie Candles, Meta Money. And last but not least, NFT Alpha, where we give you all that great NFT news, tips, tricks to make some money in this bear market. That's all we got today, BitSquad. Easy out.
Yeah, boy.